Hi, and welcome to another riveting episode of the Harvest Podcast with me, Carmel Fisher. On today's episode, I'm super psyched to speak with Jake Tullis. He is a thought leader in the crypto space. He understands coding. Based in Cincinnati, he's going to help us decode the Web3 revolution. I am so excited to have you, Jake. Welcome.
I'm excited to be here. Thank you so much for having me on. I love everything about this topic. It is my life's passion, and I'm excited to get into it. I love educating people on a lot of misconceptions they have about this asset class. Um, it'll be good.
Yeah, super psyched. But before we even get to misconceptions, I think it's important just to help us understand firstly what is the space that you're so passionate about. So maybe give us a brief overview of you, Jake. You're from Cincinnati. Tell us how your journey began or evolved to bring you to where you are today now, and why you're so passionate about Web 2 and Web 3. And maybe you can bring us all along into that space with you.
It's all been software since I was a kid, and I'm passionate about it because you don't really, it's one of the few high paying white collar jobs where you don't need um, certifications because you can see how good someone is objectively instantly. And it's one of the few places where a young kid with ambition and dreams for something better can really make an impact without traditional paths. I don't have a degree in software. I'm self-taught in everything. I have a finance degree, but I've done nothing but software my whole life, and it's really amazing to see how far my life has come since I decided to really pursue it.
Incredible journey. Do you think your parents and your dad being so into computers has what was it was influential in you finding this passion? Do you think that because at the age of 13, you were building this with your dad? Does that have anything to do with it, or was it just innate? You just fell in love with it regardless?
Yeah, it was driven by me. Dad does not know anything about computers. I gotta help him like access his email. It was me saying I want to do this, and my parents being worried that I would waste all my money by like, you know, corrupting the chips or just doing something wrong, getting dust on it or, whatever it is. They just wanted it to go well. So he helped me from just I guess advising, looking over like, is this how it's really supposed to go? Like, and then looking it up in a book or online and, just figuring it out. It was all me though. Ever since I was little, I've had a burning, almost insatiable curiosity about pretty much everything in this world. But it really fixates on technology. I think it's so cool. I mean, you
I
basically can
think,
tell a computer to do something and then it'll do it forever as long as you give it power. I mean, that's really cool.
yeah, really it's amazing for sure, and we can see with the ever changing times and the developments, rapid developments and advancements, exactly to your point, how at the fingertips or at the prompting of a human, these things can 10x our capacity, our productivity. So totally understand where you're coming from. And I think it's rare that not a lot of people have such a strong passion and inclination to a thing at a young age. And I think it's wonderful that you were that fortunate to have that. I think so many people are still in their adulthood, still trying to find their true passions. And there's nothing wrong with that. I'm just saying that you're so far down this journey and you're probably so well equipped to discuss this on a very high level with us because of that journey. So I'm going to jump into, the landscape of Web 2 and Web 3 development in Cincinnati. How has that evolved, in your opinion, over the past decade? And were there any like unique opportunities that the city offers for tech innovation?
Yeah. Cincinnati was great when I was younger and trying to figure out the things for my startups. We have a great startup Cincy movement. There's a good amount of venture capital. A lot of Fortune 500 companies are headquartered here. So there's a lot of interest in talent. And if you just look at the downtown 20 years ago and what it looks like now, they are working really hard to get really smart people here. They want to be the Silicon Valley of the Midwest, you know? And I think they're doing a great job. For blockchain and my industry, it's slim pickings. We're still very early in the adoption cycle of this technology, so there's not a lot of resources or people working in this space yet, but I do see that changing. Not just here in Cincinnati. It's actually, my opinion, in America, it's less likely to occur for the time being in America, but globally, you can't really stop what's happening. So I think more globally than anything, 16% of all blockchain or on-chain network activity and liquidity is in America. The rest is global. A lot of people struggle to, think outside of the country where this technology is far more impactful in less efficient markets. I mean, our market is really inefficient, but it's the most efficient of, everyone. If you go to Africa, Latin America, Asia, and certain parts of Asia, you'll find that this technology is saving lives in a big way. So I I focus more on what's going on outside of our borders because what's going on in our borders in this industry, it's kind of disheartening. Um,
Oh, really? But Jake, let's back it up because you're saying some really heavy hitting stuff here. So, firstly, you say it's got the most impact on disadvantaged communities or less efficient nations. First, let's
mhm.
unpack that so me and my audience really understand what you're saying there.
Yeah, of course. I love detail, so I prefer that. So, um, it really goes back to the ethos of how Bitcoin started. It's an instrument against inflation. That's the goal. And so is gold and other commodities outside of government control. That's really important to understand. Commodities outside of government control. And the reason being, in America, the most we've seen in a while, 6, 7% a quarter of inflation. That's a lot. But there are places that are getting 10% a month. The Nigerian Naira is a great example. And that means if you got, just to make the math easy, $100 on January, February, you would get $110. And then you would get 100 and, whatever that is, $121 the next month, and so on and so forth. And it's the same buying power, right? Like you're just getting inflated away. So what people in those areas are doing is they are taking their currency, they are putting it on chain, and then they're just putting it in dollars through stable coins. Just by parking their minuscule salary, it could be $40 a month, on chain, they are up 10% a month, right? They're getting 120% a year return by keeping the same buying power. I guess whatever the difference between our rate and,
Right.
Nigeria's rate. So it's like it's saving their life from that perspective. And if they were to put it into something more productive, even, well, not productive, that appreciates like Bitcoin, they're
Right.
even better off. It's so damaging to Nigerian government that they've banned crypto and completely. And they've, imprisoned American citizens that worked for Binance for, operating a blockchain company because of how much money is leaving their system, therefore their control, and going on chain, which they cannot govern. It's a liberating technology. So where corruption is high, the adoption is also high. Once you have a currency that has no entropy or an input of energy, right? Like when we went off the gold standard would be an example. We had to go
Right.
secure OPEC and get the petrodollar, which is what we had been operating on until the beginning of this year. And when you have just a fiat currency that takes nothing to make more of it, really the value of that currency is tied directly to the level of corruption because it's off like the full faith and credit of the government that's giving it to you or that's issuing it. Corruption is on the opposite end of the spectrum. So
Right.
where you see more corruption, you'll see more inflation. And therefore, you'll see more adoption of things that combat inflation because people really feel that pain. And in America, we're starting to feel a little bit of it, but unfortunately, I don't see that changing here or anywhere else. And I just see that being really good for commodities outside of government control. It's just really hard to get people there. You know, it's hard to understand, it's hard to fathom. But it really is a powerful technology that people, once they really understand, it'll catch on like wildfire. It's just a matter of time. That's why I'm long.
Sure.
Um, yeah.
So, I mean, this is why we have these platforms. We bring experts like you onto our shows so that you can unpack the details of that for the everyday person who may not know the real details, who may have the misconceptions that many people perhaps hold of this asset. But to this point, you do manage digital assets for high net worth individuals. So, what are the most common misconceptions about blockchain and cryptocurrency among this clientele in particular?
99% of this stuff is not a currency. So the first step is getting people to understand that it's software. Um, and then it's getting people to understand where the software sits. You know, these are open source internet protocols, no different than SMTP, DNS, HTTP, IPOP, IMAP3. The list goes on, RSS. Like we use these internet protocols to build apps or applications that we interact with. So most of us, imagine a Russian nesting doll, right? It's that doll that has like 20 smaller versions of an identical doll inside of it, right?
Right, right,
If the top doll was Facebook, right? And I pull it off, the first thing you're going to see is DNS because Facebook.com wouldn't work if it wasn't for DNS. Otherwise,
sure.
for us to navigate websites, we would have to remember the IP address of the server that stores all of the files of Facebook. So we'd be typing into a browser 198.25.1.0, right? So
Right.
DNS allows us to, as users, assign a name to an IP address. And that's how Facebook.com works. If I take the other doll, then you have HTTP, right? Hypertext Transfer Protocol. That is what grabs the files from the server at that IP address.
Hmm.
Then I pull that up, and now I have SMTP, Simple Mail Transfer Protocol. That is what they use to send messages, to add comments to posts, things like that, and so on and so forth. You get the idea. Applications are just a combination of protocols. Um, and without open source protocols, we wouldn't have this burgeoning internet that we have today. So I help them, one, let go of the idea that I'm a digital Forex trader. And then from there, I help them understand my edge, which is analyzing these protocols and how likely they'll be adopted. And that's where, you know, my background comes into it. Um, so the biggest misconception I would say is getting people over the hump of these are currencies. A lot of people are attached to the idea that they are. Um, and I don't know how they could be. And I would never want to invest against the American US dollar. So my specialty is identifying the things that entrepreneurs like Mark Zuckerberg would most likely choose in their app or what Mark Zuckerberg might select for Facebook. Um, to offer new functionality or to offer a new thing in general, like Twitter trying to be the everything app, right?
Right.
Which protocols are they going to settle those transactions on? Which token standard are they going to use or most likely to use when they're thinking of microtransactions, things like that. That's where I fixate.
Awesome. So, with your experience in both Web 2 and Web 3, how do you see these technologies converging or diverging in the near future, particularly for businesses?
So Web 2 and Web 3 are really only divided by a function of the internet, and they're additive. It's not either or. There's no transition between Web 2 and Web 3. It's a and instead of an either
Okay.
or. So originally, when the internet started back in the 60s, you had Web 1. It started with ARPANET, which was an advanced research project administrative network, I think. Don't hold me to that acronym, but ARPANET was what it was. It was a black budget project where the government wanted to figure out how they could, communicate more effectively for research. And for about 20 years, they built that up to what is now the internet. And IBM, Oracle, like they were all working on government contracts before 1989 to set up databases, servers, and the entire network that we use today. Web 2 came out in 1989. That's a new function. So Web 1, these computers could only read. Once the internet was public, it could write because we could write to the internet. Even right now, what we're doing, I am writing to, the computer here, and it'll be written to a server. And then when you post it, other computers that people use will read that file. And that's all it is. It's just a cycle of read and write. Fast forward to 2009, Web3, Bitcoin was invented, and blockchain as a database was thought of and proven. That allows us to now own. So it's an evolution of a feature set that the internet allows us to do. Read, write, then own. And the hardest thing for people to understand is they believe they own everything already. And the reality is they don't. So
Right.
whatever software you're using, you're giving ownership to whoever runs the server and the web hosting and everything else when you click privacy policy and terms of service. If Tim Cook didn't like the cut of your jib, all your albums are gone, all your photos are gone. Everything that you've cherished and you've, recorded would be gone. They own everything. And if you were to do this on chain, this exact podcast in this file, it
Right.
would be yours. It would be 100% yours. And if someone wanted access to it, you could allow them access to it, but it's yours. And you pay through a token for that
Right.
right. But that's how the network supports itself. So there's no division. It's just adding a feature to whatever you're working on. Um, and a good example could be an exchange. So you know how New York Stock Exchange trades stocks, and
Right.
it shuts down at 5 o'clock every day, right?
Hmm.
That's because there is basically a balance issue. If I were to send you $100 right now, you don't actually get $100. What happens is your ledger is plus 100 and my ledger is minus 100. And these are just bytes of data. There's no value being exchanged. These are just accounting systems that balance each other out. And the entire world has to coordinate. So the markets are down during the weekend and they close at the end of the day to
Sure.
rebalance the trillions of dollars that has been exchanged. In blockchain, if I send you $100 of a stablecoin, it's instant. I actually sent you $100. And that can scale up to billions or trillions of dollars on Bitcoin, and it can happen inside of 10 minutes, and you might pay $60 max for that. Where if you wanted to move a billion today, it would take, a week or two, and you would lose millions or hundreds of
Sure.
thousands of dollars in fees. So it's an order of magnitude improvement in how value is coordinated across the internet, amongst other things. That's the most
Sure.
profound thing about it.
Yeah, super informative. Thank you, Jake. Okay, let's pivot now to your hedge fund, right? It's a crypto hedge fund specializing in an index of 40 plus crypto assets across 8 industries. That's my little brief intro to Bleeding Edge Capital. Why don't you tell us a little bit more about your hedge fund, your mission, vision, the philosophy that you guys are missioning toward?
Yeah. So it's just like the SPY 500. Okay. It's an index fund that
Okay.
I actively manage. And the reason why it's a hedge fund is because it's a private offering due to the regulatory concerns in this country about crypto and blockchain and everything else that is my world. If it's accredited investors, people that have $1 million or more, or they make 200,000 in household income, I'm sorry, 200,000 individual and 300,000 household income, or if you're an advisor, like a qualified investor, you have institutional money, or you have a $5 million net worth, $500,000 individual income, or $600,000 household income. If you're fall into either of those camps, my product is available. And it is 8 themes, 8 sleeves, 8 industries, 8 sectors, however you want to say it. I do research and identify all the existing issues that, are integrated directly into blockchains. I'll give you an example. So a lot of people think that blockchains are ubiquitous or performant, da, 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 da. Like the reality is the single most, 0 to 1 improvement of how we manage data that blockchain allows us is, in fact, the coordination of these computers. It's the most redundant system in the world, which makes it the most secure system in the world. But if you have to update the state of a ledger on, in Ethereum's case, 700,000 computers every 12 seconds, that's a very secure network, but a very slow network. And for it to be adopted by hundreds of millions of people or billions of people, and to have, millions of companies publishing decentralized apps or dApps on Ethereum's network, we're going to need a serious improvement in how it scales, how it executes, how it performs, and I invest in those solutions as they come out. And I have a buy box is what it's called, but I have a very
Okay.
intense approach to identifying the most likely networks or protocols to be adopted. And I've identified 8 total areas where I believe blockchains could really succeed if they are improved. So I'm just investing in the technologies that improve blockchains, which is more of like a picks and shovels approach versus
Right.
trying to buy gold, right? I want to own the infrastructure that app developers build on so I can make money on the 1,000 entrepreneurs that try instead of trying to get better at picking the one that succeeds out of those 1,000. And that's what the index tracks, essentially. If you're bullish on blockchain being adopted by applications in any fashion, my fund would, in my mind, give you the strongest percent chance of hitting some home runs. And, the returns speak for themselves, and the amount of interest in the fund speaks for itself. So it's a very unique offering. I've yet to meet people or operators in this space that take a similar view. And we've done quite well with it so far. So it's really my brainchild. It's what I believe to be the most logical approach for such a conservative. Like I basically pride myself on being a very conservative manager in a risky, asset class.
Awesome. Now, obviously, as the manager in the crypto space, how do you balance volatility of digital assets, with the expectations of your audience, the high net worth individuals?
So I buy right. It's really that simple. You could think of Berkshire Hathaway. I would respond the same way Warren Buffett would. Like if market prices are down, I will
Sure.
be buying always, right? I care more about my entry price. So if Bitcoin goes from 50 to 35. The book value of my portfolio might be down, 15%, but I'm going to buy more at 35. If it goes down to 25, I'm going to buy more. If it goes down to 20, I'll buy more. And I'll get my entry from, let's say, 50 down to 35, 34, 33. That way, when it comes back, my returns are higher. And I have the patience and conviction in my research to peacefully navigate those losses. I just see opportunity
Right.
if their prices are down. So volatility is great for me because Mr. Market gives me great deals all the time. Um, and that's my general approach, like I don't mind getting cut in half a few times to realize the true market value of these networks.
For sure. So obviously a lot of education, I imagine, has got to go into educating your clients about potential risks and the benefits of investing in or actually developing blockchain-based solutions. You've got a podcast, right, called Crypto Classroom. Is that where you educate your viewers, your audience, and potential investors? And tell us more about that and the dynamics of the questions you're getting or the one thing you have to keep addressing. And I think you've touched on this, the misconceptions. But yeah, give us a little intro into Crypto Classroom and how you educate and the surprising things you come across.
Yeah, yeah. I would say the majority of my education occurs on my platform, JT Knows Things. That handle, works anywhere, and LinkedIn. So my podcast is long form and it's about fundamentals. I've struggled with co-hosts, and I doubt everyone wants to tune in to listen to me monologue for an hour about a topic. So I'm actually really excited. In the next, I would say 60 days, I'll have a new podcast with a great co-host, Brian Burke. He is a massive influencer on LinkedIn. It's called Bullish and Beyond. We will be out there soon, and that is going to be more of an in-depth market analysis, macro analysis of he has the exact same approach and philosophy in stocks as I do in crypto. So we're both fundamentals driven long-term investors in risky assets, which is a rare breed. I would say Kathy Wood would be the most famous or popular one with this view. And it's a rare thing because technology is really hard to value. So it's a lot
Right.
riskier than investing in retail or something that's been around for 100 years. But the same principles really do apply.
For
And
sure.
on that, on JT Knows Things, YouTube, TikTok, Instagram, Facebook, all that stuff, I mainly cover high level basic concepts, like to try to help people understand this stuff is technology. It's not a currency. If I can get everyone to understand it's technology and not a currency, I'm winning. Um,
Right.
I feel like media has slandered this tech for too long. So I'm fighting back and however I can.
Awesome. Well, thank you. As a thought leader in the space, what emerging trend in Web3 or blockchain do you think is currently flying under the radar?
You want some alpha?
Of course.
Um, you know, something I'm very interested in is interoperability. Um, I invest heavily in that because one of the issues we have is all these systems or networks, they have a different stack. So, Solana's built in Rust, Ethereum's built in Solidity. If I wanted to port my project over to Solana or vice versa, it wouldn't work. If I wanted to send Sol to ETH or Ethereum, the Ethereum network, it would be deleted. It's gone. It's in the ethos. It's like a database with no logs. It's just gone. So they don't work together at all. And I envision that, the adoption of blockchain will occur no different than the adoption of other internet protocols. So there's going to be a unified way that all these tokens interact together, and the users will never know. The only way we get to a billion users is if when you log on, you don't know what a wallet is. You're not even concerned a wallet, like, you don't care. You don't know. It shouldn't even be in your mind.
Right.
All these things need to be working completely together. And really, it can be summarized with a question like, do you pick and choose which social media app you decide to invest your energy into
Right.
based on the database they've decided to prop up their software?
No.
Right. This stuff is just database. It's just a database.
Right. Right.
Ethereum is it's where you're choosing to store your project, and it's where you're choosing for it to be hosted, no different than a website. Instead of trusting GoDaddy as an example with your website, you could trust it with Ethereum. And
Got
instead of
it.
GoDaddy owning all of your work product, you would own it
Right.
as an example. So I eventually, the biggest area I'm interested in is who is working on the best interoperability standards and how quickly is it being adopted juxtaposed to Web 2 protocols,
Right.
and how do developers like using it? Is it easy? Is it difficult? Does it solve all their problems? And if not, what would solve all their problems? Does it exist? Is it out there? These are things that I labor on extensively. And I work very hard to make the right decision on what they are, most likely to use in the future because there's no billions of users on chain without
Right.
interoperability standards of some kind.
So it is to some extent limiting the growth of the industry in general, right?
Yeah, absolutely.
Interesting. Yeah. No, I've learned so much, Jake. Thank you so much. I have so many more questions, but I'll follow up with you on your space and keep up to date with those answers there. Just some final words for our audience, where they can find you, and obviously you told us you're working on a rebrand for your podcast. That's pretty exciting. But some final thoughts you want to leave with this audience as we close out the interview.
Yeah, it's the same final thought I have all the time, and
Yeah.
it's you have a choice. This stuff's going to happen regardless of you investing or not. Bitcoin went from 0.008 to 67,885, almost
Yep.
$70,000 without you knowing about it or being aware of it. And the reality is you have a choice. It could either be you were right and you didn't pull the trigger, or you were wrong and you have a lot of regret. And you have to decide either someone like me, I'm a kook, whatever, or that there is some validity to what I'm saying and it's worth a second look. And I believe with the amount of fiscal irresponsibility we see in our country and globally, there's not many asset classes that will keep you safe. You need to be getting more than 8%. You just do. And you're not going to get that in traditional approaches. So you have to
And
ask
it's not
yourself, oh,
Sorry, JT, it's not too late for people who may have missed the initial boat. Is that what you're saying?
yes, we are in maybe 1996, 1997 of the internet boom. That's where we're at. Back then, manufacturing and retail still owned the majority of the S&P 500. And if you don't know, 15 companies are 70% of the market cap of the S&P 500, and they're all tech, mostly tech.
Sure.
Not all, but mostly tech.
Yeah.
But they all use software. So why is software eating the world? And how have you made money on that? And if you haven't made money on it and you're blind to the fact that software is eating the world, it's definitely worth a second look. And I have to say, none of this is financial advice. I have to say that. My lawyer would hate me if I didn't. It's not financial advice, not legal advice, not anything else. If you want real fundamentals, you want just to understand what this stuff is, I am your man. You know where to find me. JT knows things. Reach out. I would love to help.
Fantastic. And to JT's point, I'm calling you JT now, Jake, because I feel so much more closer to you after learning so much. You've been very generous with your information. But to your point, yeah, there's a disclaimer on the Harvest podcast as well that this is not financial advice. Do your own due diligence, make informed decisions, and yeah, find resources like JT knows, and multiple others out there where you can find true sources of information. This has been a fantastic conversation on the Harvest podcast. I'm Carmel Fisher. I've been chatting with Jake Tullis, goes by JT, fund manager, consultant, investor, and thought leader for all things Web3 and SDLC. Thank you so much for joining us. You guys stay tuned. That's it from the Harvest Podcast, available anywhere you find podcasts. Stay tuned for more.